Michael Saylor is continuing to do his thing. So it's not like the playbook is well known before this quarter. He's just continued to execute on it. But as the bull markets come back, it's been fascinating to watch MicroStrategy's price and the Wall Street's reaction to it. Vijay, any thoughts you have there? And I also want to know, because I don't know off the top of my head, is MicroStrategy trading at a premium to Bitcoin? Is a MicroStrategy share worth more than the market value of the Bitcoin it holds?
Yes, definitely. It is. It's trading, I believe, at 2x its assets under management. So the
2x.
the value of the company is 2x the Bitcoins under management, or thereabouts.
And I assume the software business, the underlying software business, is not probably.
It's de minimis at this point. I would say it's a Bitcoin holding company that is making use of the equity market premium to acquire more Bitcoins, and it's basically doing a speculative attack on the US stock market, which I think is awesome. And Saylor's sort of figured something out that no one else has figured out. And it's the thing I find really amazing is that no one else has copycatted what he's done, because this is pretty incredible strategy. If you have a business which is cash flow positive, but is otherwise boring and not really doing much, and you're on the stock market, your company has a premium for being on the stock market. The thing with stocks is that they have this premium because people just DCA into stocks without even thinking about it. Like this, you have retirement accounts, 401ks and IRAs, and people just put a certain amount aside every month, and it just goes into the stock market. It sort of sprinkled on the stock market, on all stocks. And this tends to put their price higher than it really should be if these products went around and people were very specifically choosing stocks based on their cash flow. So this allows companies to do things like raise money more cheaply than they would otherwise be able to. And that's what Saylor has done. He's figured out this strategy of raising money both through the stock market and through the bond market. And I think the real insight that he had was that he could create convertible debt, which he sold into the bond market, which then gives the bond market, which is much bigger than the equity market. The bond market is the biggest market on earth. It gives the bond market the ability to get Bitcoin exposure. And I think a lot of bond investors are like, how can I juice my performance when all of these bonds across the world are, some of them, a lot of government bonds are negative yielding or close to zero yield. How can I juice my performance? Well, look, we now get Bitcoin exposure. I can put some of my bond fund into Bitcoin. It's kind of a strange kind of instrument where it's a bond, but it can convert into equity. But the fact that it can convert into equity is where you get the Bitcoin exposure from.
Right.
So Saylor was a genius in figuring this out. He was like, whoa, there's this big market over here, the bond market, and I'm sure some of them want to get Bitcoin exposure. What can I do? Because he started out, I believe, maybe Sam can correct me, I believe his first strategy was to sell MicroStrategy shares, just outright sell shares to raise money to buy Bitcoin.
Yeah.
And then he started moving into the convertible debt. And I think that was the stroke of genius that's allowed MicroStrategy to just go absolutely crazy and become the new hot GameStop, meme stock of the world.
Yeah. I mean, at the bottom, the stock was priced at, I think, 130-ish, the bottom of the bear market. Of course, it ran up in the previous bull market when he started doing this, but now we're at 2,000 range. So yeah, you can just, that's a year and a half.
I think the convertible debt is so smart too, because they can do it at a lower interest rate as well. That's just another kind of angle there that makes it such a stroke of genius. So like you said, the bond investors want exposure to that equity upside, and that Bitcoin is a huge part of that equity upside. And now the bond investors have that. And then Saylor turns around, he can offer the convertible debt at a much lower interest rate.
Yep.
So it's a genius strategy. And I'm just like, he has issued equity, like you said. He's kind of flipped on those two strategies. Like he's gone. Sometimes he issues, sells equity when he thinks it's more overvalued, and sometimes he hits the debt market. And he's done both, and obviously it's worked out. But I'm excited to see it just continue too. I mean, there's no reason for me to believe that he's just not going to continue to tap this market over and over and over again.
Well, I would love to understand why he chose one versus another, and when he flips back and forth between it. Like what is thinking is on that. And certainly if the premium, the price of the stock gets so far out of whack with the underlying assets or the Bitcoins, then it makes sense to sell equity, to sell shares in the company. But his thinking on this, I'd love to tap his brain. And I think his strategy here, which I think is a completely rational strategy, is not to optimize the dollar price of the shares of MicroStrategy. He's trying to optimize the number of Bitcoins per share.
Right.
So what he is doing is saying, hey, Bitcoin holders out there, you want to accumulate Bitcoin. Well, I'm really good at that. And if you hold a share of MicroStrategy, the amount of Bitcoin exposure you'll get over time will increase faster than if you had stacked Bitcoin directly. That is the game plan he's playing at, because he is obviously fully orange pilled. He wants to get as many Bitcoins as possible, and he's trying to figure out the best strategy to do that, leveraging equity and debt markets.
Yeah. The other, nobody talks about this as much as MicroStrategy, but the other entity that's buying a ton of Bitcoin is Tether, the stable. I mean, it's wild what they're doing too, in a way, because they basically made an announcement last year saying that they would basically use a percentage of their operating profits to purchase Bitcoin. And they just purchased another 8,000 Bitcoin. They now have 75,000 Bitcoin. I saw a tweet the other day that's like, what's the most profitable company in the world? And I'm like, you could make an argument that Tether is. I mean, Tether has a headcount of like 60 people. They had over $6 billion in profits last year alone. $6 billion. And most of that net operating profits comes from the interest of US treasuries. So they turn around and park them. So they're actually, all these rate hikes, they take the interest that they earn on the US treasuries and they use a percentage of that to buy Bitcoin. And there's no reason for them to not continue to see that, because the stablecoin market's exploded. And, you can have your opinions about Tether, and I understand, it's history, but what they're doing in terms of just turning around and buying Bitcoin, that's just another entity in this market, this buyer that's just going to keep continuing every single quarter as they take their net operating profits, a percentage, and just buy Bitcoin with it. So you have MicroStrategy and you have Tether, and then you got these ETFs that I think is just going to continue. And that's just what we know right now. I mean, I expect more institutions and companies to come in the coming quarters, kind of looking at them and saying, oh, we can do something like this too. So
if they're not the most profitable company in the world, they might be the most profitable per employee. So if those are roughly the numbers, 60 employees and $6 billion in profits, that's $100 million in profit per employee.
Their profits are comparable to the biggest, most successful investment banks on earth. They're close. So it is incredible that they are stacking Bitcoin as hard as they are. And the point Sam made, I think, is really important. Essentially, their profits come from they've got this huge dollar assets under management, and very low costs to manage that. And then they just park them in treasuries. Short-term treasuries are yielding near 5.5%.